All right, guys. Good afternoon, good evening to some of you guys. Today is February 19th. We are trading the London session at 7 p.m. EST. And we're going to start off looking at Forex Factory just to see if there's going to be anything fundamentally or anything in the news that could affect our trading week and even for next week. I'm a swing trader, so sometimes I like to look at the remaining of the week and the beginning of next week, depending on what time of the week and what day of the week it is. So, very first thing that I'm looking at, this is for today. AUD. This stuff has already happened here up above here that's highlighted. So at 5:30 my local time, which is 7:30 p.m. EST, we have unemployment change and unemployment rate for odd, and that should be coming in within the next 30 minutes from now. So we'll take a look at that. I'm sure we'll be in the trade in some trades or looking at some trades at this time. So we're going to look to see how this moves. Just somebody remind me. So you want to be careful if you're in any odd um, pairs. And then for tomorrow, we have unemployment claims at 8:30 a.m. EST, and they're forecasting 215K. Previously, it was 213K. So if it comes in less than forecast, it'll be good for the currency. So if it comes in, let's say at 213K, then we should see any pairs that begin with USD rise at least temporarily 40, 50, maybe 60 pips, depending on what other pair you're trading. So just an FYI, that's one way you can actually trade it. We used to trade it using buy stops and sell stops, but sometimes you can have kind of a whipsaw effect where price can shoot up one and then shoot the opposite way. So let's just keep an eye on this if you're trading any pair USD tomorrow at 8:30 a.m. EST. Nothing really major for Philly Fed Manufacturing Index or crude oil inventories. RBA government bullet speaks for AUD. That's at 5:30 p.m. EST. And then Friday, we have a list of things here that we want to keep an eye on. So we'll talk about that a little bit later. But one thing we want to keep an eye on. So if you're looking at this here, it's 2 hours difference from EST. So it says 7:45 a.m. my local time. So 9:45 a.m. EST. We have flash manufacturing PMI. And then we want to look at the forecast in the previous. And one thing that I like to do all the time is click this little folder here. And actual greater than forecast is good for the currency. So if it comes in higher than 51.3, any pair beginning with USD should rise just a bit. If it comes in lower, it should drop just a bit. So right here, we're not really worried about this too much at this particular time. We'll go over this in Discord with you guys. And then we also have flash manufacturing PMI for GBP as well and for Euro. So Friday is going to be pretty busy. But today, all we're going to look for is AUD, and that's going to take place in about 30 minutes for the unemployment rate. All right. So that being said, let's take a look at the first pair here. And we're going to look at GBP AUD. And one thing that I'm looking at, so remember, I'm keeping in the back of my mind, AUD, right? We have AUD news in about half hour from now. So one thing that I'm looking at, we always say is to identify the trend. If you can't identify the trend sometimes or an uptrend or downtrend, you always want to find your key levels. Key levels are probably more important or just as important than you locating or identifying your trends, right? So if I go to the weekly time frame on GBP AUD, we can clearly see that we're in an uptrend, but we've reached sort of a peak. One thing I like to do is just kind of look left and look at these peaks here where we reached kind of a peak here back in December/January, and we may be at a pivotal point where sellers may eventually start to come in and become dominant. So in my mind, I'm looking at, hey, Deej. So in my mind, I like to sell because I'm at the peak, right? So as a swing trader, even an intraday trader, you always want to go to the higher time frame, identify the trend, and then look to see and look left for clues and look at this complete all of this space here, this imbalance, right? So another thing that I like to do is because price is up here, more than likely it will drop because we see all of this price action below from the past. So I like to do things like that. And also sometimes I would combine that with the commitment of traders report, depending on the situation. But going down to the daily time frame, now that I know that I think it's safer to sell, what I like to do is for price to come back and retest the resistance level, which I've identified right here. So I've identified this resistance level right here to short off instead of up here, for example, is because I believe that we could be creating a momentum to the downside where we have our high. I'll just circle it here. So we kind of have our high, our low, and then we have our lower high, and we may be starting a lower low. So I'm anticipating something like this for the bigger picture. For the bigger picture, if that makes sense, right? And then if we were trading the price action channel strategy, you will grab that from above and do something like this. So before we even do that though, what I'm looking at here is this resistance level here. So you can see how if I were to do the price action channel strategy, grab it to this high here. You want to try to capture the highest high, in this case, a lower high, since we're in a downtrend. You can see that is reflecting close to our trend line. Now, although we don't sell just because price is at a trend line, that's a big no. We only sell when it's at a level. Our trend line just helps us to identify the trend in which direction we should trade for less risk. So what I would like to happen is for price to come back up and meet us to this minor, we can call this a minor resistance level. And looking daily, we have 1, 2, 3, 4, 5, 6 days of pretty much consolidation. So I can trap this area within kind of like a minor resistance level and a minor support level where you see kind of a little bit of consolidation. You'll see it even better if I were to go to the lower time frame. Let's go to the hour time frame just to show you here. Okay, so this is what I just trapped here. This is what I just drew here. So something like this. So in order to take the sell, I'll feel confident doing it around this level here, retesting this previous resistance or this previous high back in February around 13th. So right here, I think will be ideal for a sell zone. Even looking left for clues back here, that was in February 6th, or yep, February 5th actually. So all of this here is a good indication for a sell. Let's just throw in a Bollinger Band for just to see how that looks. So throwing a Bollinger Band is pretty much tight, but it can continue to go higher. This could even reach to about here, to this minor resistance level right here. May not even come up here. Could come around here, but I always feel safer at the best possible price at this level right here, just looking left for clues. So that way, instead of entering around this level, so let me zoom in and show you a bit better. Take out this Bollinger Band. So we can say that, hey, price is ranging and doing something like this. So I would like for price to come here and sell. And why though you can be true, it can be true. I also want to take into the fact that price can break through and retest this level. This is the best possible price. Now, if you did happen to sell here, you just happen to know, you want to know that you do not want to have your stop loss here. Your stop loss needs to be clear away from here. And you need to take into account that if price goes any higher, it can go about a good 50 pips against you. So that's the risk that you're taking. And since we're investors and we're all about risks, that's our jobs, is managing risk before making money. Just like any investor, you want to weigh that out. If you're a swing trader, then I think you're completely good to do that, to enter right here, knowing that 50 pips is nothing to you, depending on your account balance, depending on your schedule. If you're risking no more than 2%, you want to make sure that all works into your good. So does that make sense, guys? That being said, I personally would wait for price to come up just a bit higher because we want to manage risk the best we can. What I'm looking at here, let's move my level here. I would even do a sell limit. And if you don't want to do a sell limit, you want to examine just in case price gets here, you want to just put at least an alert. All right. So I'll put an alert prior to the previous wicks. And my personal alert will be at 1.992. Let's round it off to 8. So 1.9928 for GBP/AUD for an alert. Now, again, we have a lot of pairs to trade. So we're never going to rush the trade. We're never going to force anything. And that's part of our secret sauce at BK Trading, is that we have a lot we can trade. And sometimes for those who are new, you don't want to overtrade. You don't want to just trade anything. You just want to trade based on your risk. Okay. And oftentimes, and let's say price never gets here, then we just miss it. Or price may not get here until 3 weeks from now. And we always want to get it at the best possible price. This is why we're always dropping trades. In the Forex Academy, it's more Kenya than myself, but she's always dropping ideas and signals for those who are in the signals, because we're always putting alerts all over the place. This alert may not ring until a month from now, for example, and we may drop it a month from now, all from looking at things like this, right? So that will be ideal for me to trade a sell for GBP/AUD. Does that make sense, guys? I'm just going to kind of give a temperature check before we move on to the next pair. And you can see how I started from the weekly, said, you know what, based on price action, this imbalance here, we're all the way here at the peak. This is where we're at here, right? I think it would be less riskier to sell. Now that I got my sell bias going in my mind, let's drop down to the daily time frame. What trend are we in? Am I in an uptrend or downtrend? I can even do that on the weekly time frame as well. I can say I'm in an uptrend, but you can see how price is trending, going up, going down, and then you can see how our highs are getting even lower. It's still going higher, but it's not as aggressive because we're reaching the end. This is how I swing trade, and I swing trade a lot. I love swing trading like this, and this is also known as B swing. Um, when you see imbalances like this, and you can hold this for weeks, guys, weeks, days, sometimes, depending on your tolerance. All right. Do all GBP pairs move on the same direction? No, it depends on what pairs you're trading. It depends on what other pairs you're trading. Like GBP Chef, for example, there's always a dominant pair, and GBP is a dominant currency. But in this case, when you're trading Chef, for example, Chef has been pretty dominant. It's been pretty strong against a lot of other currencies. So I think now other currencies are starting to catch up. But for the most part, GBP pairs do kind of move the same, but it also depends on what you're comparing it to, if that makes sense, right? So let's look at GBP JPY, for example. Let's look at the imbalance here. This is where we're at right here. I'm just going to draw a circle so you can get an idea. This is where we're at right here. Let's scroll back and look how high it's been previously in the past. And I can keep going higher and higher, higher, right? Look how high GBP JPY was. 713,318. And let's compare it to where price is at now. 190,000 or 190.137. So does that make sense? And if I go back to GBP AUD, this is the highest it's been here, but then you can see how price has started to cap at one point. Like this was considered the highest here. So they pretty much move the same. GBP is really, really dominant. Price dropped significantly during the Russia-Ukraine war back in 2022, like I believe February, March 2022. This is where we get this huge dip from. And those who were in the academy, we profited really, really good from that. I did even a YouTube video on that before price even dropped. This was a huge drop right here. Now it's just starting to recover. Now we're at the cap, and I think we're going to start trending downwards eventually. All right, hopefully that makes sense. Looking at the commitment of traders, and give me 1 second. Sorry. Let me look here. Okay, so I'm just looking at the commitment of traders. This is actually a copy from Valencia. She drops it in the COT room pretty often. I haven't looked at the commitment of traders on the bar chart, but I trust her because she's taken the course. She knows how to add the numbers up. And just looking at this here, at her image, GBP AUD, we can see that sell is negative. The GBP AUD, the number is negative 1569, which indicates a sell. And look at the numbers here. As it starts to increase in the negative, that's when the trend will start to continue downwards. The lower the number for, like, for example, odd cat is only 114, a buy. That means we're probably going to ramp up to go to a buy and swing as far as swing trading is concerned. So it's going to ramp up. It's going to take its time. We're at, for GBP AUD, we're at negative 1569. So it's starting to ramp up, but not enough strength compared to, let's say, NZD JPY. We're at 36,000, where the sale is pretty dominant and it's already wrapping up to the downside. So that's how we kind of read the net change and the CLT report as well. So this is my confluence, the CLT. My confluence also is price action when I go to the higher time frame. When I start to go to the lower time frame, the daily time frame, for example, like this. Then I find my levels. I want to sell off of this resistance level, and then I can go to the 1 hour like I showed you and start going lower and lower and lower, identifying as a sniper entry. All right, let me read that. So, all right. So how's the screen? Is there any buffering? Is everything good? Not mine? Okay, I just want to make sure you guys are good. All right, so the next pair that I'm looking at is GBP JPY. All right, let me go ahead and delete what I just marked here. All right, so let's go to the weekly time frame. Of course, we want to identify our trend here. Weekly time frame, we're absolutely in an uptrend, but we've been climbing due to the low interest rates for the yen. Now things are starting to change a bit. So what I pretty much did, we had our deep downtrend right here. This was our deep downtrend. It started to recover, so we don't need to capture that price action. Price shot back up, and now we're starting this kind of a pullback here right now. So I'm trapping this in the channel. Let's go to the daily time frame and look at it a little bit better. All right, trapping it in a channel. Once you do that, you want to go and find your levels based on the time frame that you trade, based on the price action channel strategy. This is my resistance level here. And all I'm doing is looking at wicks multiple times. And sometimes it may take some time to get your eye used to finding that. The reason why I'm not capturing this zone here is because I'm not really worried about that. So if I grab my measuring tool from where price is currently at up to here, that's 439 pips. So that's far away. I'm not really worried about that. I really only want immediate price action. I don't plan on being in this trade for long, right? I doubt that it will reach up here before I start profiting. So I want to get this immediate price action. I'm looking at wicks multiple times. 1, 2, 3, 4, 5. I'm on the daily time frame. Broke through, came back, 6, 7, doji candle, 8, 9, 10, 11. You can see how important this level is, or this price, I like to call it, to our big money makers, our hedge funds. And I always say that our levels are important. This is why I drew the squiggly line here, because if I move it over, this is the price here that the big hedge funds are looking at. So they don't care too much about how you draw your trend lines. They care about the price and when to sell and buy. Our trend lines is only there to identify which way we should trade. And since I'm going to capture this in a downtrend, I'm only interested in selling. So that being said, I'm looking at this zone here because I identify my levels, and this is the only place I want to sell before I even go to the lower time frame, right? So I want to find where I'm looking to sell on the higher time frame. And then once price gets to around that zone, then I would start to go to the lower time frame to look at candle behavior to see if I'm ready to pull the trigger to sell. So as price is moving down this channel, of course, I want for price to get closer to this area here, the trend line, which is not as important, but this zone here, which is most important. So from where price is at now to here is about 100 and about pretty much 200 pips. Now, knowing GBP, JPY, this can recover in a day, maybe 2 or 3 days. So we probably won't see anything until next week, depending on if there's going to be news or high impact news or anything like that. But again, we mark our charts, not necessarily for now. We mark it because of the best level that we're looking to pull the trigger in. Whether if it happens tomorrow or 2 weeks from now, we always do this because we only want the best price as investors. Just like if you're buying a house, you want the best price. You're buying food, clothes, you want the best price. If you're an entrepreneur and you're selling products to your friends, you want the best price so you can make a profit. So they're offering this 190.226 right now. I'm not interested. I want it up here so that once I release it, I can make a profit. So my personal alert is at 192.210. We missed the move. It's good. All yen pairs drop. Yep. They pretty much drop, but they can recover. They can come back and recover. And if it drops to the support zone, then we'll be looking to buy. But since it's pretty much some time for it to get there, it's about 300 pips away. I'm not interested in that level quite yet. We can definitely put an alert if we want to, but I think it will come back to resistance before it would come back down here. Let me check the commitment of traders really quick. GBP JPY. GBP JPY says a sell, and look how much, negative 27,000. So that means the ball is starting to roll. The higher the numbers, when you have a negative, the higher the numbers, the faster the volatility and the more, I would say, precise that price will drop. Sometimes if the number is too high, you also want to be careful because now the reverse may start to reverse. Okay. So that being said, we should see a drop here. But if I miss it, I just happen to miss it. I wanted to get that discount first before the drop. And then you can take it to the middle of the channel, which we always teach, or before, whatever you feel comfortable. But I do think it could end up coming back to the support zone. All right. Next pair. Let me know if you have any questions. Feel free to stop me, guys. Let's take a look at odd USD. All right, odd USD. Let's start on that higher time frame. Clear our chart up. Higher time frame, we're one, identifying the trend, or two, we want to find a gap or imbalance. Okay. We also are identifying the demand zone in this case, which is at the bottom, or supply zone once it reaches the top. So here's our demand zone for odd USD right here. And we can see if I spread it out, this was COVID. So this is why it dropped down here, but it started to recover. This is the true level right here. So this is absolutely a B swing, or was a B swing back in January. And look how much it started to rise since January, about 200 pips or so. And it came back, pulled back down, and I would have been a good entry to get back in. So let's go to the daily time frame. Okay. All right, so let's go to the daily time frame. I'm going to pull this down here. So this is my immediate resistance level right here. What I'm looking at here, this is our demand level right here. This was our resistance level, but it broke higher. This could continue an uptrend. Remember, back to the weekly, and I hate to sound like a broken record, but I hope that this sticks with you. Look at all this price action here on the left. This is how odd USD did, right? So if you want to imagine yourself as one of these currencies and the other currency is a seller, someone you're selling to, okay? Your USD, for example, odd is someone you're selling to. So if you're selling to someone, look at the transaction that you guys did in the past, all the way up here. This is what you can get back to. Now price is heavily discounted. You have the item for very cheap, and now you can continue to give it to the seller or to the person who's going to buy it from you because it's very cheap. So you're attracting buyers because your product is very cheap. And you know that past price action indicates that you can even sell it at a higher price, right? So here's a home that that you're interested in right here. Let's just call this discount. Dirt floor cheap. This says it in the past right here, dirt floor cheap. This is your discount. This is your potential. Okay. Discount and potential. So this is considered your demand level, AKA discount. And this is what a swing trader slash position trader would love when it gets to this area. So you're going to find support and resistance levels all throughout these trends. You're going to find support and resistance levels all throughout. So if I go to the daily time frame, here's my support level, here's my resistance levels. But every now and then, and few far in between, you're going to find demand levels like this. And this is, in my opinion, the best opportunity. This is what I used to trade before leaving my 9 to 5 all the time because I couldn't keep my eyes on the chart. And I would put positions in here and hold it. As it gets to resistance level, sell some of it, pull back, add more. Sell some of it, sell some of it. As I sold some of it, what I mean by that is taking profit. I'm taking profit, paying myself. As it pulls back, I add more. Because guess what? We're at the beginning of an uptrend. No doubt. No doubt. We're at the beginning of an uptrend. I guarantee you by December 2026, remember this snapshot here. You can make a note to yourself if you don't believe me, or if you just want to test it out, make a note to yourself, snapshot this. Odd USD, look where price is at. December 2026, minimum here. Getting my measuring tool, 750 pips automatically. Swing trading in the higher time frame is golden, especially for those who work 9 to 5 and aren't confident. You just have to make sure you're risking no more than 2% and just you can put in 10 cents a pip, 20 cents a pip and let it ride. As it hits a resistance level, pay yourself. If it's going to pull back, add more because you're going to always have resistance, pay yourself, pull back, add more. Pay yourself, add more. Pay yourself, add more. And this is all part of our risk management trading as well. All right. So I went a bit too much into that because I didn't even give you an entry. So we have a possible break. So we have a break and a retest on the daily time frame. I would love for price to come back here. If you missed this entry initially down here, I would love for price to come back in this zone, anywhere within this red zone, and continue our uptrend. Now remember, this is the daily time frame. I was just looking at the weekly time frame. It can take months and months to get to where it needs to be, but it will continue to climb. It will continue to climb. Now, can we see something like this and come back to support? Absolutely, you can. It depends on high impact news. I don't think it would, but if it did, it wouldn't break any further than this. And that's just another opportunity to get in. Now you're getting in at a better price. So you just want to make sure you monitor this as you're swing trading and holding and adding positions and paying yourself as well. All right. Any questions, guys, before I move on to the next pair? Oh, let me go ahead and give you a price, an alert if you want. All right. So my alert here is 0.62835. So 0.6283. So anywhere within that area, I think will be a pretty good opportunity to buy. So from where price is at to where I'm looking to enter is about 60 pips away. That's not too bad. Let me check the CLT really quick for odd USD. Odd USD buy. You can see it right here, according to Valencia's CLT report. You can see how it's starting to gain momentum, right? So next week, this 97.24 may be 10,024. 11,000. And then a week after, 12,000. You'll see it start accumulating, telling you that we're continuing that uptrend. All right, next pair. Let's look at Euro USD. All right, let's start off on the weekly time frame. All right, so I can go to the daily time frame. Again, you want to find your levels. If you first you want to find your trend. So obvious downtrend, connect your highs. Once you do that, once you find your trend, I'm going to stretch it out just a bit. Now, quick question. I want to ask you guys something. So I'm connecting my highs in this downtrend, right? Let's move all of this out the way. I'm connecting my highs, my lower highs in this downtrend. So should I continue to run it through like this? So this is option one. Should I continue to run it through like this? Or should I stretch it out to capture this high right here? So that's option two. So option one, should I drag it here? By doing that, I'm capturing this lower high here, this lower high here. Or option two, should I drag it out to this lower high? I'm just curious if anyone's going to respond. There's no right or wrong answer. This is a safe place. So Pamela, Tanisha, you said option two. Anybody else? And for those who say option two, run it through. Okay. For those who say option two, why this option instead of this one here? And for those who say option one, why option one? One and two, run it through. All right. So we have, okay, before I answer that or respond to that. So option two, Chantel said option two. So I see a lot of option two, and I don't see any option one. There's more money to make stretched out. Okay. So Quita said option one. I like the engagement. Sometimes I want to go through on the team talk because I can actually hear your voice and we can engage that way. I think that's the best way to learn when you have engagement as well. So it had made a new lower high. So a lower high is an ingredient for a downtrend. All right. To give space. All right. So remember, there's no right or wrong answer, but this is my thought process here, right? When you're looking at a trend, you want to find your higher highs and higher lows for an uptrend or your lower highs, lower lows in a downtrend. And one way to do this, if you're not sure, is grab the high, then find the pivot point. That's your low. Now here's your lower high. Let's say this is our lower low. Lower high, we can say our lower low, lower high, right? So you have to have that sequence. You have to continue that sequence in order for the trend to still be intact. If it breaks this high here, then you're possibly looking at a trend reversal, right? Because now we have a lower high here. So now I'm looking for a lower low. Instead, we have this here broke higher, retesting this support level here, right? And then now we're doing something like this. So this tells me that the buyers and sellers, they're trying to figure out something here. And this could possibly be a trend reversal. One way to do that is look left for clues. And if you find that this is a low, like a demand level, like I showed you before, then more likely we're in a trend reversal. But we don't. If I look left here, we have a brand new low here. But it's good to know fundamentals. Fundamentals are king sometime, right? And because I know that this was back in 2022 and I'm trading the euro, this is when the Ukraine-Russia war started. This is why it dropped so much. So remember, high impact news, and we're not talking about high impact news like Ford's factory when you have unemployment claims and things like that. That's high impact news, but not enough to drop and make trends like wars or COVID-19. So I know that this was here due to the war and then it started to recover. So I think that this is a false low because of high impact news. And I think that this could possibly be the true low. So I do believe price may continue to go higher. And the reason why I'm going through this, I want you guys to kind of understand how I think of things, right? We all think of trading a little bit different, but just trading for about 15 years now, I've learned to understand things and why price act the way it does. And price doesn't respond just because it's all about people and supply and demand. So we have our lows in our higher low sequence, our lower high sequence, and then it starts to break up a bit right here. Now, can it continue to go lower? It absolutely can. However, I do believe, looking at the sequence, that this was our support level here. Absolutely. This is where it bottomed. This was the bottom here, circling our wicks multiple times. And I would like to see a progression to go higher. But guess what? It capped here. So this is why this is considered my resistance. So my resistance is actually previous lower low right here, and then future lower high, right? So more times than not, your lower low is going to equal as your lower high. But it interrupted our trend because it broke out right here. So now this is like our new resistance right here. But now it's our future support currently. So I know that could have been a lot, but I'm just trying to break it down and show you how I think. This is my resistance due to this being a previous lower low and then a lower high. Once it breaks this zone here, then we can possibly see upward momentum. This is now a resistance level right here. This is our support. And so this is what I'm seeing here. Notice how price came to retest and rest here. So this is what I want here. This was my previous lower low, run it through to my lower high, and price is right here, right around to my trend line. I can draw my trend out wide or not or so, but I would like a reaction around where current price is at right here. And I would like to enter a buy. It already started wicking on the daily time frame. So capturing this wick to where price is at, I already moved up about 21 pips or so. Euro USD, remember tomorrow we have USD news. So I wouldn't trade this right now and I wouldn't trade it tomorrow. I would trade it possibly after the news, or actually I think Monday will probably be the best to see exactly what's going on. So that being said, I'm biased. My bias is a buy, but I want to see what happened with tomorrow's news first. All right. So does that make sense? Is that confusing? Does anyone have a different opinion? Let me know. Didn't break trying to reach 10. Okay. 101,766. What's your alert? Okay. So my alert. So where price is currently at now, I think that's a great area to buy. If you want to wait to see if it's going to come back to retest this wick right here, then you can get this wick. So if you're on the daily time frame, look at yesterday's candle around this, say mid wick, somewhere around here. I think will be a pretty good alert. So I'll add it around here. So around 1.0408. Even though right now I do think price may continue higher. And tomorrow's news can increase it, but we still don't know. But for now, even if you were to day trade it, you can possibly get a good 20, 30 pips possibly before tomorrow during London session. So I'm just going to put possible buy. All right. I don't want to spend too much time on one pair, guys, so I apologize. Next pair we're going to look at is Odd Chef. I'm not much of a chef trader just because it's been pretty unpredictable, but I felt this was a pretty decent opportunity here. So price is approaching our beautiful resistance level. I think this is pretty obvious that this is a resistance level, and I think price will reject from this. I just wouldn't hold it for too long. So as price climbs to, I have my alert here, about 10 pips away. So 10, maybe 15 pips the most. I would sell it, my alert, probably only for maybe 30 pips. So this is a good intraday trade. So my personal alert here is 0.57508. The reason why I wouldn't sell it or sell it for too long or hold it for too long is because we could eventually break higher. So it tested this on the 19th and then on the 12th and then on the 11th. So it could eventually break higher, but just looking at previous price action here, it tested this level 1, 2, 3, 4, 5 times before it broke lower. So this is definitely a strong level here. So I think it could possibly eventually break higher looking at previous price action. Just going back, I love to just do that. This is my discount here. But for intraday trade, you're not really caring too much of the bigger picture. You're looking at just getting in for 20 to 30 pips and then getting out. So sometime maybe during New York session, this may be a pretty decent opportunity. Next pair is Odd NZD. All right, Odd NZD. I'm sorry, give me one sec. I put possible buy. I don't know why. I think it was supposed to be a possible sell. Let me change that. All right, bigger picture. Finding your levels and an uptrend, starting to cap off. It could break higher. Let's see. Wick. All right, so this is what I'm looking at to determine if it could break higher. So this was war. So whenever you go back to 2022, so the beginning of 2022 to about October to September, October 2022, on any currency pair, you'll always see either a peak or a bottom, depending on what pair you're trading. Here's our peak, and it's always because it was high impact news, it's always kind of like a false supply level or false demand level. I call it false because it's like a I wouldn't say once in a lifetime thing, but it's like a huge high impact news, right? So that being said, this is more like a false level. I'm not worried about this. This is more of our main secure level here. I can just draw it straight through. So before the war even started, it was hanging around here, ready to drop. And I'm sure a lot of people who knew the war was coming profited when people were selling as price peaked here. So this is a false level. This is our main supply level right here. So notice how I always go out to the bigger picture to see what's going on left to determine our B swing levels and see how it respects it every single time. Let's act like this war never happened. Absolutely would have dropped. And look how deep it dropped every single time. So over 600 pips or so came here. Even the first time it came here, let me spread it out to make it a little bit more visible. When it wicked here, 200 pips multiple times, and it finally broke through because of the war, came back here in 2024 July. Look at the drop here, 330 pips. So this is all B swing. You can minimally get 100 pips on a B swing. The longer or the further the distance. So for example, when it was here before the war happened in June, let's say June 2022 to September 2024, you can see that it was about 2 year difference. We had a 330 pip drop. So here we go again at our supply level here. I'm anticipating a drop here, and you can take it midway to be safe for swing traders. So this is for swing traders. I'm on the weekly time frame. So as it's wicking, if you miss this move and you're a swing trader, wait for it to come back up and you can take it about midway here. That will be easily about 100 pips or so. For day traders, let's go to the daily time frame. So my sell limit / alert is right in this zone. Bulls are in effect right now, so it would be a bad idea to sell. Look at the candle on the daily time frame. It's filled to the top. So you want to wait for price to come up here. If it starts to wick, oftentimes you'll wait for the next day to determine if it wicks because we're on the daily time frame. So we wouldn't know that this wick was here until the day closed. So you may not see this until tomorrow, or it may be consolidating for a bit until Monday. But as long as you see a wick here, that simply tells us that sellers are starting to take control. If so, this is my alert here. I'll give this to you really quick. It's at 1.1145, 1.1145 for sell. If you're a true swing trader, you don't have to get it in exactly at that price because remember, your stop loss is going to be wide enough as a swing trader that it doesn't matter. Your stop loss is going to be above this level here. This is why we capture our resistance level and our support level pretty wide because we know that price can go anywhere within the zone here. If you're 60 pips in drawdown, that doesn't mean anything to you because you're going to easily get 100 pips or 200 pips, depending on how long you want to hold it. So daily time frame for intraday traders, I would get in around 1.1145-ish, give or take. And you can easily take this down to here, which can take a day or two. Or you can take it to your minor support level, which is about 40 pips. How do I determine a minor support level for intraday traders? Remember, Wix tells us a story. It tells us that there's an imbalance. It tells us that buyers and sellers are kind of battling. I like to see it like that. Wick here, candle, wick here. Remember, each day. This is each day. Finally broke, came back, wick here, wick here. So this is a minor support level. So this is almost a guarantee you're going to profit here. This here may take longer because it could come back up to retest multiple times before it drops lower. So you never know with swing trading, but you get the most profits. Intraday trader, you get your profits. It's a little bit more guaranteed. Swing trader, you're going to get a lot more profits, but you're going to have to wait some time. All right. Does that make sense, guys? So, Annalie, did you get my alert? Can you explain the counting of the wicks again? So the counting of the wicks, I'm sorry, are you talking about the support level that I just drew or the supply level that I just did up here above, Sequoia? Sorry about that. So, yep. So my alert is 1.1145. So anywhere within that area. So it doesn't have to be exactly 1.1145. It could be 1.11, 3, for example. So just as long as you're within this area, because price may not even get to this red zone. We can even see how price kind of capped out right here. It may stay right here and drop. So it depends on how comfortable you are with your lot size, how many positions you're putting in. There's a lot that goes into it. So that's why King and we sometimes don't give you a stop loss because everyone's situation is different. You may only have one entry where someone else may have 3 entries. Someone may have a different account size than someone else. You may be a swing trader. Someone may be a scalper. So the stop losses are going to be different based on your trading style. So looking at odd NZD daily, yesterday candle had a pretty large wick. Yep. Would that have been a short entry? Yep. So it's been testing this resistance level multiple times. So something happened for it to wick this aggressively here. So if I grab this here, it's about a 40 pip wick here. So price came in here, shot up 40 pips, came back to the entry, shot down 30 pips from where it started, and then closed 20 pips from where it started. So it was a pretty aggressive day yesterday. And for this pair, let me just see. So let's see. So AUD, NZD. So AUD had some news for their wage price index, and NZD had some news in which it looks like it came in the exact for their official cash rate, and then also their monetary policy statement. So with a combination of these two, could have showed the imbalance of buyers and sellers for this pair specifically for that day, for yesterday. And now it's starting to normalize again. So you can see how price is here. We're starting to reject here. So again, price may not come up a little bit higher to our resistance level. It may start to pull back down, but it depends on how comfortable you feel with your lot size. If you want to start entering now, with your, how do you feel if price happens, if you get in now and it happens to come back up and retest this wick, you'll be down 44 pips or so. But just know that you're safe at a resistance level and eventually it's going to drop. And I'm pretty sure that it should come back at least to this minor support level here and maybe even this level here. It may take a couple days to get to this level, and it may you may get to this level today or tomorrow. All right, that's enough of odd NZD. I think you answered it when you said they tell a story. Yep. Yep. So Wix tells a story, and depending on the time frame you're in will determine what that story is. I like the daily because, for example, look at these wicks here. They're pretty aggressive. And the body also tells a story as well. But if you kind of look at it collectively, you can almost visualize your resistance levels. You can almost visualize it here when you combine the wicks and the body and your support levels as well. It just so happens that price closes, you only have 24 hours for a daily candle to form. So sometimes your body may be closer to the resistance levels than the wick, depending on when it closed. It still doesn't mean anything, right? So this is still a dominant resistance level here. And just looking at the wicks here, even if I bring it up just a bit at these wicks and capture it and pull it here, it pretty much almost aligns to these wicks right here. So I do believe price is going to eventually come back down to this zone here, which is in the middle and could even go further. All right, so my next one here is Cat Chef. This used to be my nemesis because this was one of the few pairs that actually defied my B swing. But now that it's started to behave a little bit more and a little bit more predictable, I think that this may be a pretty decent opportunity as well. So capturing price action, looking left for clues, finding wick action. You can start visualizing. You can easily see how price is supporting right here. You don't want to get caught up too much in between, but when you see a number of bottoms here, this is a strong support level or demand level. And you'll do the same thing for your supply level or resistance level. It's very, very visually easy on our eyes, right? So once you do that, then it starts to become a little bit more predictable. But on the higher time frame, you may not always find a trend. For example, on the Cat Chef, we were in a downtrend for years after years after years, and now it's starting to consolidate a bit. And so we're playing the consolidation game up and down, and eventually it's going to break. If you're familiar with the Wyckoff method for trading, it's just pretty much saying that history repeats itself. You're going to have a downtrend followed by a little bit of consolidation. This is the B swing, uptrend, consolidation, downtrend, consolidation, and so on and so forth. And so that's what we're seeing here. And this here is our B swing level slash demand level right here. So we could continue to see, we may see an uptrend. It's just been taking forever. So for now, we're just playing the consolidation game. And that being said, as I drill down to the daily time frame, I will be looking to sell off of here. I don't know if you guys have taken this trade at all on February 25th or on on the 11th or 12th around this area here, but this would have been a fantastic level to sell off of. And it went down about 60 pips or so. So now it looks like price is wanting to climb back up. I would be interested in selling here, but again, I would not sell for too long. Only intraday or scalping on this level here. So my alert is 0.6394. 0.6394. And guys, since my main time is in the Stocks Academy, I come through here sometimes. Kenya's main time is in the Forex Academy. When I put these alerts in, and when she sees it, even if you guys aren't putting your alerts in, she sees it and she thinks it's a good idea to sell or buy, she'll put it in oftentimes for me. So we share our trading view charts with stocks and even with Forex. So if it rings, we both hear it. And depending on what we see, we'll let you guys know. So that's how that works. All right. That is in the Cash App. My last pair that I actually have is Euro AUD. And then I want you guys to let me know if you guys have any pairs as well. And I'll take a look at it. All right. Euro AUD, I think this will be pretty much an awesome opportunity to buy. And what I'm focused on is this level right here. So I'm looking at this past price action here and where price is currently at here right now. So of course, I'm going to trap everything in price from the past. Price can absolutely come and drop a little bit lower. But what I'm looking at is for an immediate buy. I'm looking at a double bottom, possible double bottom. So something like this here, 1, neckline, and 2, and push back up at least to this neckline right here, which was previous support. So that's what I'm looking for. I just put my alert slightly lower, which is about 25 to 26 pips away from where price is at. And it may or may not get there. Again, it depends on your personal investment. You own your own trading company. You're your own investor. Do you want to get in now? And if so, possibly profit going up. And it may not come down to my alert. That's one of the things that you have to wrestle with your own self. It may not come down to my alert. However, you're getting in at the best possible price if it comes down further. But if you get in now, you may know, you have to know that price could come down lower and you may be in drawdown about 30 pips to about 50 pips or so in the red. So those are one of the things that you have to wrestle with. So that's why I put my alert here at 1.6389 because I want it to drop a little bit further. And then if I get in here, that's when my trade will start at 0. And if price happens to drop further and I'm 40 pips away, I feel more comfortable being 40 pips away than, let's say, 65 pips away if I entered now. So that's something you'll have to wrestle with. And I'm looking at wicks here from before when price dropped, not when price broke up higher, because it broke as buyers broke it higher. But last time when price came back down and it wicked pretty aggressively, coming all the way down to this zone here. So that could possibly happen, or that may not happen and only come and retest this as it did before, creating a double bottom. So those are the two options that it could happen. You can enter now, possibly securing your profits and taking it up, or you can get in later, a little bit lower, but you're risking that price may not come down this far. So there's a pros and cons to both. So that's the last pair that I have, guys. Let me know if you have any opposing analysis based over what I went over. Like I said, my trades, I always say this, my trades are not the end, right? It's not saying that it's this or that, and that's it. It's all based on what we teach, price action, our strategies, and some of the things that I've learned over time. So if you have a different opinion or a different view, feel free to share and let me know. So Chantel, you said Euro GBP. Let's take a look. All right. So what's the very first thing that you should do based off of what I showed you in the last few pairs, Chantal? or anyone actually for that matter, what's the very first thing that I personally would do before I actually start entering any trades? How would I analyze this pair? Top down to find your trade, Mark. Absolutely. Yep. Higher time frame. Okay. And the higher time frame could be a daily for you. It could be weekly or monthly. As long as you get the bigger picture, you can scroll out. See, I'm on the daily. I can scroll out and I'm seeing the bigger picture. Sometimes if the candles look distorted like this, then I may want to go to the higher time frame where it's not as distorted and I can spread it out and look at it a lot cleaner. I see now I can see that I was in a downtrend. Let me clear this out. Now that I can see that I was in a downtrend. So it doesn't matter if you're on the daily, weekly, or monthly, as long as it's on a higher time frame and it looks clean to you and you can make sense of it. Now I'm on the monthly time frame and this looks a lot cleaner to me. So I can draw my demand level here. It's not a coincidence that price happened to wick at these zones here. My picture is in the way. Okay. So it's not a coincidence that it happened to wick within the zone. Look at this. Look at the time frame. March 2022, April 2022. Remember, 22 was the Ukraine war. We're trading Euro, GBP. These are currencies for parts of Europe. So you're going to be affected by that. Guess what? Price happened to come down and test the extreme lows. So this is actually a very sturdy demand level to me. And I believe price is going to consolidate for a couple hundred pips up and down, possibly overall starting to lead into an uptrend. Right? Remember the wick off method I showed you? You're going to have your highs. If I spread it out on the monthly chart, let's just start from here. You're going to have your highs, low, little consolidation. You're going to have your highs, consolidation. Some consolidation may be longer than others. Lows, consolidation, high. So that's all you pretty much have. This is a long wick here, aggressive wick. And then your lows. That's pretty much it. So when you find, that's why B-swing is so powerful, guys, because it's like it almost always happens. Like I said, Cash Chef was one of the times where it completely disrespected B-swing, but like that was probably the only pair I've ever traded that has done that. Whenever you see this, it happens. It doesn't happen often. It happens sometimes years and years from now. But when it happens, you're almost guaranteed to, like, I would hold this all the time, all the time. All right. So that being said, we're at the bottom here. We're on discount here. We have all of this future potential up here from looking at the past. So my bias is a buy, and I'm on the monthly time frame. Now I'm going to scroll down to the lower time frame. Let's go to the daily, and now I'm going to find a better opportunity. I'm going to fix my chart. So this here is what I would keep an eye on. This was December. Let me see. December. Okay, so this was December last year. I'm not sure exactly what happened here, but just looking at behavior here. Candles here, 1, 2, 3, 4. So we're looking at the upper part of my red rectangle. And then it broke through. And then again, 1, 2, 3, 4, 5. And the reason why I'm counting it is because it's at the upper part of my support level or demand level, aka demand level. Again, came back to retest it. I think where price is at now, let's see, about 18 pips to the upside. So of course it would have been best to come down here and enter here. But from here, from where price is at now, I am 95% sure that price will rise at least to here within the next week or two. Let me get, so about 100 pips, about 85 pips, give or take. So this is like a minor resistance level. I'm not going to get too deep into that. But if you don't want to wait that long, you can get 20, 30, 40 pips, 50 pips, whatever you feel comfortable getting out. But this is the absolute low simply from starting on the monthly time frame. Like when we're talking about the war on Ukraine all the way back here, this was our low. This was like, you know, huge, right? High impact news. It dropped and then it continued higher for a few hundred pips, if not maybe 1,000 or so to the upside. And it took time, but this is our absolute low. This is trend reversal. So let me look at the commitment of traders really quick and see what happens. So Euro GBP, this is what Valencia put. So Euro GBP. So it says sell negative 13,966. So when you're looking at the commitment of traders, it says sell, but what will really let you know if we're at the beginning of an uptrend, and this is why you have to look at price action first before COT, because COT will tell you a story. This tells us that it's been in a sell, 13,966. This simply means that they have this much into Euro dropping and GBP rising. So if we look at the commitment of traders next week and the week after, and this number starts to get closer and closer to a positive number or zero, that's when the trend is starting to reverse. So let me show you really quick. Let's look at Euro. on the committed traders really quick. So this is what we want to see. So I'm looking at euro right here, right? If let me go back. Let me go to non-commercial. Okay, euro, and then let's see GBP. All right, so you can see how euro was increasing in sales. So whenever you have a negative number, that means sellers are in demand. So let's start from January 14th. We have 60,000, negative 60, negative 62. So sellers are still in control. Negative 66, still getting stronger. It starts to lighten up a bit to negative 58, and it starts to pick up again this past week at negative 64. So they're still pretty strong. And then we have GBP. On the other hand, what we want to see is a negative number for them. And that tells us that price will start to rise. So GBP, and I don't want to get too technical on this, right? Because I don't want to really talk too much about CLT because it can be a little confusing. So you want to start to see kind of the opposite here. So we see a negative here, and it looks like it's starting to get closer into a positive number here. So if these numbers start to shift and this overall number here that Valencia sends starts to become a positive number or starts to decrease in the negative numbers, so GBP, Euro GBP, for example, is negative 13. So let's say next week it's negative 12,000. Then you know it's starting to reverse and start to get to the buy. The next week, negative 11, negative, whatever. And then it starts to get to zero and then positive numbers. That's when that trend is already taken off and you're more than likely too late to the bottom of the trend, right? So once you start seeing that positive number, it's already up here. So that being said, I think we're at the beginning of an uptrend. And I think right now where price is at, you can start profiting. And I would probably put in a low position size, maybe a couple of low position size, maybe 3, 4, 5, 10-cent lot sizes. As it rises, pay yourself, exit 1 or 2 of them because you're going to have a pullback. Once you have a pullback, determine where that pullback is going to come and then add more. Pay yourself, add more. That's what you can do as a swing trader, even an intraday trader. So you can swing trade and intraday trade all at the same time. All right. So I didn't want to get too technical, so I apologize for getting to the CLT, but I was starting to get a little bit excited. So, all right, CAD JPY. So your double bottom, you would buy at the bottom and go to the neckline. Some traders, I see them taking the trade at the break if neckline. So you're talking about for this pair for Euro GBP, Mark? So you're talking about this pair, Mark, really quickly. So you're talking about a break of the neckline for this pair. Are you talking about on the weekly or the daily time frame? Where did you see the double bottom? Just so that we're on the same page. The one prior. Oh, you're talking about the are you talking about Cat Chef? So if you want, we can look at Cat Chef afterwards and we can kind of go over that. Oh, you wrote that a while ago. Okay, sorry about that. So yeah, if you want, we can go over that after the live. So guys, I'm going to actually cut the live. I don't want it to go too long. We're already over an hour, so I'm going to cut it for the replay purposes, and then I'll just hang out just in case if you have any other questions, okay? So guys, those who are looking at the recording, feel free to let me know if you have any questions based on what we went over, or you can ask Kenya, and then we'll take it from there. God bless you.